and you're welcome. I'm Ini John Mekwa. Well, first of all, before we go into what's happening in the news, today is International Youth Day.
You have to wish me happy.
Are you a youth?
Yes, I am, actually.
Okay. It's a thing of the heart or is it a thing of age?
Heart, age, all.
Anyway, for this year, the theme is Transforming Food Systems, Youth Innovation for Human and Planetary Health. And it's aimed at highlighting the participation of young people in food security. And,
yes.
With the threats, the pandemic, COVID-19,
Climate
insecurity
change.
in Nigeria, climate change.
Right.
That, I mean, yesterday or 2 days ago, we spoke with Juliana about the issue of potatoes.
Exactly.
Might be scarcity of potatoes by Christmas
Yeah.
because of flood, and we trace that to climate change.
Exactly.
So
and the youths have to play a major role in this because at the end of the day, tomorrow, who's going to be here?
Just them.
Exactly.
But, you know, another thing is also that with the youth come innovation and new ways of doing things.
Right.
So it's not just about the old ways. And what we've come to realize is the new ways also is most of the time, not all of the time, more productive.
And
so
also inclusion of youths in Nigeria is very important.
The population is larger also. So we do hope...
Just create an enabling environment for the youth. That's the focus of this year. It's all about the youth.
It's all about the youth
we wish,
and food.
And food security.
Yes, food
we wish
security.
every youth out there happy.
We wish all of us.
All of us.
Happy Youth Day.
Exactly. We're all together in this one. So
anyway, moving on now. Yesterday, the World Bank released a report that listed Nigeria among the top 10 countries with high debt risk exposure as at the end of June this year. According to its 2021 audited financial report for International Development Association, the World Bank rated Nigeria 5th on the list with $11.7 billion IDA debt stock. The financial statement for IDA further mentions that Nigeria had a total undisbursed balance of $8.07 billion, consisting of $1.46 billion loans approved by not yet signed and $6.61 billion signed loan commitment.
Meanwhile, the Debt Management Office has reacted to the World Bank report, which classified Nigeria among 10 high debt risk countries. In a statement, the DMO reassured that Nigeria is not in any form of debt distress, contrary to the World IDA report released. The Debt Office also clarified that IDA loans, which carry tenors of 30 to 40 years, represent one of the most favorable borrowing options for countries like Nigeria and is also consistent with the medium-term debt management strategy of the federal government. The DMO adds that the cost of IDA loans, which is the service fee of 0.75%, is considerably low, thereby moderating the cost of debt service.
You know, we've talked a lot about Nigeria's debt stock on this program on, different platforms.
Right.
And then to now have the DMO come to reassure Nigerians. Nigerians are asking a lot of questions.
There's
is that the World Bank doesn't have enough...
The right information.
Or what's really going on. Because it would really be nice for us to know.
Because they should have the figures.
Yes, they should have the figures. Exactly. And Nigerians ought to know the status of the country when it comes to debt and some other...
Because debt is a very important issue, and we should know what's happening, the health of our debt stock at this point. Anyway,
all right, so moving on now, oil prices were steady today following 2 days of gains after a call from the United States for major producers to boost output, reinforce supply concerns as economies ease their coronavirus restrictions. Brent crude futures edged higher by 5 cents to $71.49 a barrel, while U.S. West Texas Intermediate crude futures gained by 4 cents to $69.29 a barrel. U.S. President Joe Biden's administration is asking OPEC Plus to boost oil output to tackle rising gasoline prices that they see as a threat to the global economic recovery. Data from the United States Energy Information Administration shows that fuel demand in the top global crude user is averaging 20.6 million barrels per day over the past 4 weeks, roughly in line with 2019 levels. And U.S. refiners slightly increased the amount of crude they processed last week. OPEC agreed in July to boost output each month by 400,000 barrels per day over the previous month, starting in August until the rest of their record cuts of 10 million barrels per day, about 10% of world demand made in 2020, are phased out. However, there's still concerns that the increase will not be enough to meet the demand as the United States and Europe ease their coronavirus-induced movement restrictions. Well, we have to talk more about this. We have Adeshola Sumoni. He is an analyst with Financial Derivatives Company, and he joins us from the UK to expand this conversation, but that'll be after the break. Yeah, welcome back. We have with us, joining us now, Adeshola Sumoni, analyst with Financial Derivatives Company, joining us from the UK. Hello, Adeshola. Good morning.
Hello, Ine. Good morning.
Good morning. Great to have you again this week.
Thank you. Good to see you too.
So the United States wants a boost in oil output. What about the threats, of the surge in COVID-19?
I think what's happening right now is, let me start by saying higher oil prices are associated with higher U.S. gas prices, right? And higher U.S. gas prices or petrol prices is one of the drivers of inflation in the United States. I mean, gas prices averaged around $3.2 per gallon in the United States last month, and this is around like 5.4% higher than what it was in the same period last year. And higher inflation is also inimical, or it drags economic growth. So overall, I think what the President Biden administration wants is lower oil prices, and that is why they are urging OPEC to increase production. And whether or not OPEC would agree to this is yet to be seen, but I think it is unlikely that OPEC would increase their production, or they would increase their planned production just because the United States act. Also, you mentioned the rising COVID cases. I mean, what that signifies is a risk to oil demand growth, right? And again, these factors together just points to lower oil prices. But I don't think it's likely that OPEC would increase their output or change their planned line of action just because the United States acts.
Right. But considering all these factors, what are the possible implications for Nigeria?
I think in the unlikely event that OPEC changes increases the pace of releasing our oil onto the market, I think it means that Nigeria would have more room to improve their production. Nigeria's current quota is about 1.8 million barrels per day. Even though the production is still struggling to meet up the quota, production is still around 1.4, 1.5 million barrels per day. I mean, due to some disruptions, vandalism, and force majeure. But if that happens, if Nigeria is able to increase their production, it will be associated obviously with lower oil prices. And I think it would overall, because Nigeria's oil revenues are more sensitive to production rather than price, I think that would increase Nigeria's oil revenue. It would increase accretion to the external reserves, and it would support the exchange rate.
Still in the U.S. now, the inflation numbers remain steady at a 13-year high of 5.4% in July, while in the UK, the economy is rebounding 4.8% growth for the second quarter. When you put these two giants together, what are the possible implications of this development, and how do you see this affecting emerging frontier market economies?
Okay, so let's start with the UK because I'm in the UK. It's good news that the economy is growing 4.6%. I mean, majorly driven by the easing of coronavirus restrictions, also with vaccine rollout. I mean, currently about more than close to 90% of the adult population in the UK has been vaccinated against coronavirus. So almost all the restrictions have been lifted. So that's that on the UK side. In the US side, I think it's good news that the rate of growth of inflation is slowing down, because it ties into the argument by the US Fed Chair Jay Powell, and as well as White House economists that this spike in inflation that we see in the US is transitory and is likely to be short term, and overall in the long term inflation will converge to the long term average rate of 2%. So the fact that inflation is slowing down, it's keys into that that story. But it will be a problem if inflation does not slow down, because that means it may force, the US Fed to change their stance on their monetary policy. Currently, monetary policy rate is around is close to 0%, I think 0 to 0.25%. And the US Fed has mentioned that they do not expect to change their stance until around at least 2023. But if we do not see inflation slow down, if inflation continues to pick up, then it may force them to move earlier. And that would, cause shift in capital from risky assets in emerging and frontier markets like Nigeria and to the US. And that, has implications for foreign portfolio investment. That has implications for external reserves accretion. And that will definitely mount pressure on the exchange rates.
All right, Adesola, share your thoughts on this World Bank report listing Nigeria among the top 10 countries with high debt risk exposure as at the end of June this year, and the DMO's reassurance that Nigeria is not in any form of debt distress.
Oh, so with the World Bank, so like you said, 10 countries were listed as high risk exposure, and these 10 countries, they account for, I think, 66% of the IDA's debt exposure. And I think this debts increased this period because of, the IDA, which is the development branch of the World Bank Group, really increased their loans and their loans to developing countries to help them, fix their budgets, to help them strengthen the health systems, and to help them strengthen also their social protection systems, and to help, cushion the effects of coronavirus. So that's why, we see this huge debts for these 10 countries. But I think overall, it comes back to the issue of Nigeria's debt sustainability. Nigeria's debt to the World Bank, so the debt to the World Bank as a ratio of Nigeria's total external debt is around 35%. But the good thing is these debts are long-term and they are low interest debts. So in that way, that gives us some form of assurance that, okay, in the event that the federal government is able to continue to meet the contractual obligations. But again, it brings us back to the story of Nigeria's debt sustainability. I mean, we always put around this issue, these ratios, debt to GDP ratio around 13%, I think. Anyway, the idea is the debt to GDP ratio is low. But I think the more important ratio we need to look at is the revenue to debt service ratio, which is very, very high. I think it's around 90% or even more, depending on who you ask. So that is the more important ratio. And that also brings us back to the discussion of Nigeria's low revenue base. I think what's the fundamental part of this discussion is Nigeria's low revenue base. And I'm sure the federal government are looking for ways to, continue to boost Nigeria's non-oil revenue so that we can have more sustainable debt.
Well, let's help us to understand with this report, placing Nigeria as one of the high debt risk exposure. I know you said, okay, because of when we look at our debt to revenue, then the country should look for ways to boost its revenue. But should Nigeria or Nigerians be worried about this high debt risk exposure, or should we just continue to look for how to improve our revenue?
Of course, you should be worried, because at the end of the day, this debt is long term, so it's going to be passed down to younger generations of Nigerians to pay. But again, I think that particularly these World Bank loans, they are low interest rate loans. They are low interest rate loans, and they are very, very long term. So I think over time, I think that possibly the plans by the federal government to increase, revenue, to increase Nigeria's revenue base, the increase in VAT and other factors, would probably help increase Nigeria's revenue base. So I think at the end of the day, why we should be worried, I think, let me see. I think at the end of the day, let me think. Give me a minute, please. I forgot what I was there to say. But I think, because it's long term, we don't have to worry about it in the long run, because Nigeria's revenue base.
But we don't have to worry about it. But I mean, like today is International Youth Day, and then these are the guys who we are the guys who would be there in the long term, in the future. So aren't we just building, a problem for the upcoming generation, the youths?
I think if push comes to shove, Nigeria will refinance the loans. Nigeria will find sometimes even borrow to repay back loans that are due. So I think that I don't think that it's likely that Nigeria will default on their repayment obligations.
All right, thank you so much, Adesola Sumoni, for sharing your thoughts with us this morning. And do enjoy the rest of your day.
All right, thank you.
So we'll take a break now. Of course, we have another line of discussion coming up, and that will be on the African Continental Free Trade Area. Join us after the break.
And to our next conversation now, the African Continental Free Trade Area is set to accelerate intra-Africa trade and boost the continent's trading position in the global market by strengthening Africa's common voice in policy space. And Nigeria declared 2021 the AFCFTA year, and it has the National Action Committee on African Continental Free Trade Area to coordinate relevant ministries, departments, and agencies and stakeholder groups to create a continental market for goods and services. 8 months down the line, how much of these set out objectives have been achieved? Secretary of the committee, who is also the special assistant to the president on public sector matters, Mr. Francis Anatogu, joins us now from Abuja. Great to have you on the program.
Thank you.
Good morning. So since the takeoff on the 1st of January, what achievements can Nigeria boast of right now?
Oh, thank you very much. I think in terms of where we are first on the Africa Continental Free Trade Area, you can look at it from two angles. One at the continental level, and then at our local readiness level. At the continental level, yes, we flagged off trade under AFCFTA. However, some critical documents or procedures that you need for actual trade to start are still being finalized. One of that is the schedule of tariff concessions that will tell you what can be liberalized and what cannot be liberalized. Also ongoing is the rules of origin negotiations, currently at 90%, and that the AFCFTA Secretariat and member state or state parties are working very hard to conclude this so that actual trade can start. At the domestic level, some of the achievements we have recorded are: one, we now have a national implementation plan. It is a draft, but it has been issued to stakeholders in the public and private sectors to review, comment, and based on that, and in coming weeks, we should be able to finalize and send to the steering body of the committee for approval. That's one key area of achievement that we've recorded. The second area is that we have kickstarted our state or subnational strategy development program. And this is critical because if you think about it, non-oil export covers every state in the nation. And with AFCFTA, every state has an opportunity to grow its IGR, grow their export base and production capacity, among other things. So that has started, and that's an achievement on our side. We've also been doing a lot of sensitization at MDA levels, but also with various sectors. So these are some of the key achievements we have recorded. But in addition to that, specifically on some areas of implementation, we have made recommendations on trade remedies mechanism, which is a key safeguard for Nigeria as we go into AFCFTA. And I'm aware that at the moment it is the Ministry of Justice it's working on finalizing what has been proposed. Obviously, once that has been approved, then I'll be in a position to mention what has been approved. That is one thing. The other achievement is that it's on how we plan to manage compliance to the AFCFTA rules of origin, and we have defined how we have defined the concept on how it will run. We have defined the organization on how it will run. We have developed the models that will help in calculating the compliance levels to rules of origin. And in the next couple of weeks, we are starting the pilot test with about 25 companies to across all the various areas covered under trading goods to ensure that when we actually roll out, there will not be any hiccups.
Okay.
So in a nutshell, these are some.
All right. So, Ms. Anatugu, so it's good you mentioned that you have 25 companies that you want to start off the testing with in a couple of months or so, because one of the conversations around AFCFTA is, especially when you speak to manufacturers, is that Nigerians or the stakeholders themselves have not been carried along and they are not prepared to maximize this platform. When you talk about non-oil export, what are we exporting? How prepared are we? What's the value chain? How is the manufacturer ready? What is in manufacturing? Is the packaging right? Have these people been carried along so that they can maximize this AFCA platform, you know, and so that Nigeria can, at the end of the day, be also a beneficiary from this?
So, indeed, I think the very first point I have to make here is that the AFCFTA is a very ambitious project, and it's a long-term project. And what we have achieved so far is building the foundation for it to proceed on a sustainable level. We have been working very, very closely with the Manufacturers Association. We have been working very closely with a number of other private sector or trade associations, the National Association of Small and Medium Scale Enterprises, the National Association of Small Scale Industrialists, among others, and even the organized private sector in general, in terms of developing this national implementation plan that I talked about. And they are now going through this national implementation plan, and some have started bringing comments. Others we expect to come in a week or two. In fact, by next week, I will be in Lagos with a number of people working with MAN on their blueprint for manufacturing. So there are so many things happening, and these things are being implemented as we go. But beyond that as well, there are also a lot happening in the export space. The Export Promotion Council is doing a lot to promote export, to prepare SMEs and Nigerian businesses for export, not just for AFCFTA, but for export in general. So as we have moved from the level of what is AFCFTA to now, how do I get involved in AFCFTA? And we are looking at it at various dimensions, at various levels, with the state government, with the trade associations, and going right down to the business people themselves, both at sector level, but also at state level.
So are you saying that for manufacturers and any other interested person, they have to go through these trade organizations?
It is important for them to go through the trade organizations because it helps us coordinate things, right? You can there are a number of materials out there. You've got a lot of resources on our website, for instance, but working with the associations, they are able to capture all the concerns. They are able to capture what will work and what will not work. So it is important that what we are doing remains as pragmatic as possible, as practical as possible, and we consolidate the needs and work together. Again, if we do it together, they have a nationwide spread. So as we work with them, they are able to pass the information down to the grassroots, to all the companies, to all the businesses within their fold at the national level, but also at the very grassroots. This AFCFTA needs to get down to the local government level, and it's coming all the way up, and we're working with these trade associations and with the state governments to ensure that we get down to the grassroots level.
All right, but there are concerns that the increased regional integration could lead to unfair competition for jobs and the goods they produce. What is being done to protect local producers?
So it's I think there's something we need to be clear about. We import a lot already. We are import dependent. So the very first change that you will see is a switch in traders or trade partners from those from outside the continent to those that are within the continent. Now, the AFCFTA rules of origin encourages African content, local content. So there will be jobs within the continent. Now, if you talk about protecting jobs, it is important that we grow the capacity, the local capacity, to be able to, first of all, retain our domestic market share, and that is very, very important, and that is a key goal within the implementation plan. Catalyze the domestic market, because indeed, when we buy what we produce, we are helping the manufacturers or the service providers to grow the strength or the capacity to be able to now venture to other countries. So we are looking at that in terms of growing the production and service capacity on one hand. We have identified areas where we have a comparative advantage, areas we are already exporting and we need to scale. We've identified those areas, those products, services, and across the value chain where Africa imports a lot, that even though we are not doing a lot in the import space, we need to be there. So all these have been captured in the national implementation plan that I've talked about, and these are now being reviewed, and inputs are being, we are receiving inputs on them. But it is important, it is critical that we catalyze our domestic demand, our domestic demand for our products in critical sectors, manufacturing and agriculture, in our services sectors as well.
All right, so the agreement also seeks to lay the foundation for establishment of a continental customs union. Could you explain to us how this will work, and at what stage is this at this time?
Okay, so at the moment, we are at the stage of a free trade area. Customs union is an advanced level, similar to what we have at ECOWAS. First of all, what we are doing is to implement a free trade area. And at the level of a free trade area, what we have is to implement customs, a very effective customs cooperation arrangement, so that customs across African countries are able to see what other countries are doing and able to respond. By the time you get to the customs area, that is, at that level, you are now agreeing that everybody must have a specific or an agreed tariff levels for different goods. We are not at that level yet. We won't be at that level in the next 5 years or even 10. The focus now is to implement a free trade area, and that in itself is it will take us a while, and it requires a lot of effort.
All right, and we wish you all the best in your efforts. We hope to see the fruits of your effort very soon, though, and see Nigeria maximize the platform of AFCFTA. Thank you so much, Mr. Francis Sanatogu, a special advisor to the President on Public Sector Matters and the Secretary to the Committee on AFCFTA. Enjoy the rest of your day.
Thank you very much.
So, well, still talking about markets now, but equities and the FX markets, that's what Willie Bong will fill us in just a moment. Hello, Will.
Good morning, Amy.
Good morning.
Yesterday the stock market made its way further into the green zone as investors sustained interest in shares of Airtel Africa, which we saw the previous session, supported the positive market performance. We saw the all-share index hedge up higher by 0.69% to 39,448.46 points, while the listed stocks value increased by about 142 billion naira as 19 stocks gained against 14 losers. Meanwhile, total volume of trades declined by 61.8% to 474.53 million units, while the volume was at 2.08 billion. Value was at 2.08 billion naira. Deals was traded was at 3,599 deals. Transcorp was the most traded stock by volume at 20.49 million units, while MTN was the most traded stock by value at 7.81 million naira. On the sectoral chart, we see that the performance was mixed. The banking index recorded the highest gain of 0.45%, and this was all thanks to GTCO and Zenith Bank. The industrial goods counter was pretty quiet. That's no surprise. It closed flat because there's been no activity for Dangote Cement, Boa Cement, and Lafarge, the behemoths of that sector. Now we have joining us on the phone Mohammed Kayode, a stockbroker at APT Securities Limited, to talk to us about this. Hi, Mohammed.
Good morning to you.
Good morning. How are you doing today?
I'm fine.
Great. What is the inaction we are seeing in industrial goods counter? What's causing it, this quiet, muted transactions, and there's been no movement in the share price for the past couple of days?
Hello?
Hello. Can you hear me?
I said,
what's happening? What's causing the inaction in the industrial goods counter, especially for Dangote Cement, Lafarge, and Boa Cement?
Yes, you know, this company that are listed on the Nigerian Stock Exchange in the social sector and the high cap stock, and this stock constitutes almost about 30% of the market capitalization. And because of the large cap that they have, their price is high, so the volatility and price is very low. So you don't see them changing price as often other prices do.
Oh, okay, that's good. So, but what about you just recently, Dangote listed 50 billion, 3 tranches of 50 billion naira under its 300 billion naira debt program. How is that going to affect the shares? Is that going to have an impact on the market?
The listing of Boa Senior and the listing of Dangote Cement Senior Unsecured Fixed Fund is as a result of the cost by the company. So for the expansion of their company projects, and also to refinance some of the short-term loans, and also increase their working capital requirements recently. So these are nothing to do with the prices in the market as it is now, because the listing is just what is being done. But the issue has been raised May this year. So the only time the information will start to flow into the market, or the sentiment, the investor will start to react to those information, it is when the impact of that loan being gotten is now filtered into the bottom formula of the company, and the company start to see an encouraging figure, and this entices the investor, and this affects the sentiment the investors have around the stock. So started to reacting to that information. But as it is now, I don't think there's any influence that has on the market right now.
Thank you so much, Mohammed Kayode, for that. We move over to the NASD OTC market, where the market cap and the index fell by 0.78% yesterday's trading session. The market cap was at 648. 0.03 billion naira, where we see that volume and value of deals declined also at the close of yesterday's trading session. The NGX the NGX was the only advancer in yesterday's trading, as its share price gained by 1.55%. At the fixed income market, the bond market continued its quiet note for the third trading session of the week, with some slight demand at the mid to long end of the curve. Offers improved by 6 basis points on the 2050 papers, we see here. And the treasury bills market, we also see that the trading was also quiet as the market participants shifted their attention to the auction which held yesterday, which was conducted by the DMO. Nevertheless, there was slight demand along the long end of the curve. There was also buy interest in the CBN special bills for 30th August 2021. Where we move on to the OMO market, where we see that there was almost no action there. Yesterday, but the CBN is expected to conduct an OMO auction tomorrow, giving the OMO maturity of 80 billion naira, which was rolled over earlier this week. Moving back to the NTB auction, we had about 156 billion naira, which was allotted from a subscription of 398 billion as against the 51 billion on offer across the standard maturities. But to talk more about what happened yesterday, we have Keye Iwebi, the fixed income dealer at FSDH Merchant Bank. Good morning, Keye.
Good morning. Thank you for having me.
Good morning, and good to have you too. So tell us what happened at the NTB auction yesterday.
The DMO sold 156 billion at the NTB auction yesterday across the 3 standard tenors. This was 105 billion more than the amount offered. We saw a lot of interest on the 1-year paper. The swap rates were maintained at 2.5 and 3.5% for the 91-day and 182-day papers, respectively. While the 364-day paper dipped significantly by 85 basis points to close at 7.35%. The auction was oversubscribed with subscription level at about 774%, bid to cover ratio of 2.55. The huge subscription recorded at the auction yesterday is actually due to the low supply of securities in the secondary market. For about a month now, the CBN has not conducted any OMO auction. So we've seen a lot of demand for both OMO and NTB papers across the curve.
Oh, I just want to ask one final question. Are investors not adverse to the drop of yields, especially for the 182-day bills, which dropped from 8.2% to 7.35%?
Okay, like I said, the CBN has not conducted an auction for about a month now. So both the retail and corporate investors, including the banks, are actually very aggressive on NTB papers. So despite the drop in yields, we continue to see significant demand for NTB papers across the curve. And we expect the market to continue to trade on a bullish note as market players attempt to fill their net demand in the secondary market today.
So briefly, in a yes or no, should we expect the same at the OMO auction today? Is it a yes or a no? Should we expect the same?
Okay, so there is no OMO auction today. We've not received any notice yet.
Oh, okay. I probably got that information wrong. But that's Keye Iwebi, fixed income dealer at Access FSDH Merchant Bank. That's what we have today for the markets.
All right, thank you so much, Will. We'll hope the market will continue in its bullish run, and we'll see how that goes. Well, we'll take a break now. When we come back, we'll head straight to London to speak with Juliana. Just stay with us. It's Business Morning on Channels Television. Welcome back to Business Morning. Well, the UK economy returned to growth in the second quarter of the year, expanding by 4.8%. We have Juliana joining us now to tell us what drove that growth and some other factors surrounding it. Hello, Juliana. Good morning.
Good morning, Innie.
Yeah. So what drove this 4.8% growth?
Consumer spending. It's all about the consumer spend, as you said. Pretty decent set of Q2 figures from the British economy this morning, growth of 4.8% between the months of April and June. This is partly down to the pretty successful vaccination programme. But then, of course, we know billions of pounds was locked up in banks as consumer habits changed because of the lockdown, and the pent-up demand as well as inflation is where we've got this 4.8% figure now. This is the fastest Q2 growth in the G7 nations, much to the delight of Chancellor Rishi Sunak. There are some concerns, though, and that's because, of course, at the moment we're looking in the rearview mirror. We're currently in Q3, and according to the PMI data that we've been looking at over the past couple of months, the growth during the summer is starting to return to levels that we saw late last year, and that is much to do with the Delta variant. We know that about 1 million people per week at a peak were staying at home. They were self-isolating because of pandemic. So even though it's good and GDP at the moment is just 4.4% below where it was in February 2020, there is still a long way to go in this post-pandemic recovery.
Yeah, and this recovery also shows because only 15% of Londoners have returned to the office, and that's in spite of the ease of the restrictions.
Yeah, it didn't feel that way when I was on the tube getting to work this morning. It was pretty crowded, but this information has come from a notable think tank, and they are revealing that people are not returning to the office as much as the British government would have liked. on July the 19th, the government's official work from home policy was dropped, and people have been invited to come back to the office. A lot of people are pretty comfortable working from home in their kitchens. And how sustainable is that for the British economy? Because we know so many of the cafes, of the restaurants, of even the high street stores, they rely on people picking up a dress or a new suit on their way home. They rely on people going for drinks after work, getting coffees. So they do want people to start coming back in. But, of course, we still know there are a couple of million people still relying on the furlough scheme. That is going to be phased out in September. Will they return to the office, or are these jobs going to be lost? We'll just have to wait and see until the end of next month, Vinny.
Yeah, and I guess with the reduction in the furlough scheme, then we would see which step people will take. Well, thank you so much, Julian. I will talk to you later at 1:30 during Business Incorporated.
Thank you.
So let's peep into the crypto market with Ladi. After 2 bullish days, there's a pullback.
Oh, yes.
But I hope this pullback is not here to stay.
Well, traders believe that this is just profit-taking, and the bullish sentiment is still in the market. Let's look at it now. Bitcoin there at 45,000, that pullback there, pulling some red in the market. Top alts by market cap, CBNB is also in the red. But we have XRP doing well this morning. Market cap, $1.88 trillion, down about 1.17%. 24-hour volume, $132.82 billion traded. It's 18% up this morning. Bitcoin dominance, 45.09%. Price of Bitcoin, $45,000, down about 2%. 24-hour volume, $35.81 billion. Traders are still looking up for that $50,000 resistance, and also the 55,000. So if that 50K breaks, we might be on the way to the 60,000, 65,000 range. Let's bring in Gilbert Jopata now. Hello, Gilbert. Great to have you.
Yes, good morning, Mr. Ladi.
Good morning. Yeah, so let's talk about, the market hitting the 2 trillion mark for since the first time since May. What does this mean for the market?
Okay, this means that there is renewed optimism and hope from investors. And this is a result of the major price surge in Bitcoin, Ethereum, Cardano, and other major alts. And this is a proof that the falling wage on Bitcoin and other cryptocurrencies wasn't the end of the bull market, but rather a pullback. And I know that most persons think that we are having a bull trap, but this is okay because it's a proof that we are in the disbelief stage of the second half of this bull run. And one major sign that this is a bull run is that we will see major rally and shorter pullbacks. So at this point, it proves that we have begun a new phase of the market.
All right, but when alt season?
Okay, if we want to see that euphoric alt season, then we want Bitcoin to continually do well in price, followed by Ethereum, and then we see a decrease in Bitcoin dominance, because whenever Bitcoin decreases in dominance, we always see alts do well, that euphoric price surge where we see big money move. And this is because people begin selling their Bitcoin into altcoins, so alts begin to gain value against the Satoshi. So if we want to see the euphoric alt season, we want Bitcoin to do well in price, followed by a decrease in Bitcoin dominance.
All right. So we're going to put you on the spot now. What alts are you bullish on right now?
Okay. I am bullish on Digibyte. I'm also very bullish on Ethereum. I am bullish on Cardano. And the major large market cap cryptocurrencies, which also includes BNB and FTT. I have my eyes on these bags.
What about some micro caps, some high risk assets?
High risk assets. Then I should be looking at Pundix. I also think Pundix has a sign to do well over the long run. I also have Link. There is Algo, Polkadot, Solana. And probably Doge. We have to see Doge also do well. They have the major man to
king
pull
of the memes.
Strings with his tweets.
Okay. All right, Gilbert. Always great to talk to you. Thank you.
My pleasure.
All right, looking at the top alts by market cap, only XRP in the green there. It was trading at 97 cents in the morning, but now it's above the $1 mark, even though they still have that debate about XRP, either being a security or not. That case is still not solved, but we see some bullish moves with XRP, even though the co-owner is said to be dumping some of his XRP holdings at this point, but it has no negative impact on the XRP price. You see it there, up 8% this morning. It's looking good, Inni.
And we hope it to continue looking good. Tomorrow is Friday, and normally it's a red Friday, but we do hope tomorrow will be different.
Yeah, well, watch out for that. True.
So that's a wrap on the program. Thank you so much for joining us today. I'm Inni John Mekwa. Do remember, 1:30 Business Incorporated will be here, and we'll give you updates from the world of business.
Thank you for watching. I'm Ladi Williams. Bye for now.